So, my man, I'm excited to connect, get an understanding of how you feel like I can best support you.
Last year, at the beginning of the year, I'm going into the year thinking like, how do I expand my business, right? We had just did like 3.5 million in profit in 21. My team is primed. I know I'm going to make my first million last year, right? As far as my side of the business. And so I'm thinking like, okay, how do I expand? So I launched a brokerage. I started the infrastructure for a mortgage company, and I'm doing all this business and I'm busting my ass. And then I go to this conference, and I want to say it was July of last year for brokerages. And I walked out of there. You would have thought I went there to be inspired on how this brokerage is a huge opportunity. And I walked out of there like, I'm done. Like, these people are busting their ass to make a fraction of what I make in the investment world.
No, from your perspective, where do you feel like your bottleneck is, or where do you feel like you might be seeing some type of challenge in your business that I feel like we can work on today to make sure we get you some value right away?
My number one challenge is I have no confidence in underwriting commercial real estate. Underwriting the deal so I can go back at these people and confidently make offers after offers after offers, because it's a numbers game, right? And I need to make more offers on a weekly basis so I can get deals in the pipeline. Number one.
Okay, so underwriting deals. Okay, so we'll take that as focus number one. Now, what asset class are you trying to go after the most? Like, if we could choose one.
I have a lot of leads already because I've done some mailings. Industrial, storage, and retail.
So what I'm going to bring up right here, the underwriting spreadsheet that you can download. All right, so let's say I'm going brand new this market, and we're going to go to filters. Just because, like, I'm going to say, like, we're going to choose one random deal, and we're going to pretend like that's the deal we're looking at. All right, let's see what we got. First property that comes up. Okay, just really quick. Let's just say that we're looking. You call up this owner. Right? Let's say it's not listed for sale, but you call up this owner. One of these leads, they call you back on one of your marketing pieces or your cold calling, and this is the person who called you, right? They give you some information. In a small industrial property, it's only 6,250 feet. Says it's 100% leased. They're selling it for 685 grand, about $110 a square foot. Let's relate this back because you're an investor. Like, what do you look for in a great investment?
I look for a value add position. So in this position, I would be looking at, obviously, that it wouldn't be 100% leased, right? I got to be able to justify why I'm going to have to buy this property at a lower price. But yeah, a value add position is the big thing. It needs renovation. It needs more leasing, a combination of all the above, improvement of leases. Maybe the market rent is too low.
So I'm looking for all the same thing, right? Like, so I'm on the same page as you. The thing, so like, ignore the 685 for a second. Let's just say, again, you talk them on the phone, they say they want, 600 or 700 grand. Point is that now it's like, okay, how can I underwrite this deal to make it like one of your single family flips? I mean, that's how I think about it in my head. I'm like, how can I buy this, just like you said, at a cheap intrinsic value to what it could be worth? So I do the same exact thing. So it's like, let's just say that this property right now, all that it's showing us right now is that it has expenses of $6,500. It doesn't even give me an income. Let's say that it makes 50 grand a year. The only information we have is it makes 50 grand a year in the square footage, essentially, is what we have. Super under rented, whole 9 yards. What I'm looking at here is saying, like, okay, what is a steal of a price if we just went off of a price per square foot? Like, what is a super cheap intrinsic value based on price per square foot? So I want to know, like, okay, in this area, what are leases going for, right? So like, let's do some math. Right. So let's go back. Instead of for sale, let's say for lease. Point is that now I'm going to try to find what I feel like we could rent this building for. I'm going to go to filters. Let's just say the whole building, let's say building size is 10,000 feet, available space, let's say at least 5,000 square feet. Again, I'm looking for just industrial only. All right, so this gives you an idea. So 14, 12, 10 a foot. Like, if I make this building really nice, maybe I get in the mid-teens, low teens, right? Let's just say my market right now is like 14-ish a foot all day long. You basically will take $14 a foot times the 6,250 square feet. So I know that my intrinsic value, I can maximally rent this building out, and I will make $87,500, right? $14 triple net. And you can call up a couple of the brokers and try to get a gauge on where that is. You take the 6.25 here, 6.25, because I say 6,250 divided by 1,000. We find out what the real estate taxes are. What's your average percentage value for Chicago? I'm just saying, like, on a $400,000 house, how much you pay taxes on it?
400,000 is going to be at least 10,000. Say 5%. What's that? 6%.
5%. All right, yeah. So let's just say we leave it at 15,000 for taxes. Let's say your insurance probably around the same, maybe higher. Let's say all this is about the same. It'll calculate out. You're probably not going to pay any your gas or electric because your tenant's going to probably pay that. This is based on what it's earning today. So let's break this all down. So let's just say it's 4,000 a month right now. It means it's bringing in, let's say, 48 grand a year, quick estimate. And then we say that it can bring in 680.75 divided by 12 is 7,300. So now we're saying it's at 4,000 now gross, but it can go to 7,300 net. Obviously, the tenant's not paying any of the expenses, so that's why your net operating income as today is probably terrible.
Right.
However, on the upside, let's say they pay your taxes, your insurance, all your utilities. So these are all zeros. So you don't pay anything. They pay all utilities. And then all you're paying is your management fees and your vacancy rates, right? So you're at 71,000 net, right? So I'm saying nothing because they'll pay everything. You're going to get $14 triple net. Tenant's going to pay all expenses. So it's like, all right, well, on this building, as an example, and let's just say that they want 700 grand. And estimated renovations on this building is probably like what? For a 6,200 square foot building, you're probably going to spend what? 50, 60 grand?
Chicago, 6,000 square feet. How much? How big was it?
6,250 square feet. Again,
let's just figure $27 a square foot. It's expensive to rehab out here, bro.
We'll say so that's 168,750. Depends on what I'm saying. Depends on what work needs to be done, right?
Right, 100%.
Well, that's fine. Let's do that. That's fine. 168,750. So that's what it needs. She wants 700. Obviously, as of today, it's a terrible cap rate. It doesn't make any sense to pay 700 grand. You're going to be losing money day one. However, it's like, what can you refi this building at? If you're going to at a net operating income of 71 grand at a 6.5 cap, the property is going to be worth $1.1 million almost. Now, I'm not saying you're going to refi at a 6.5 cap. I mean, obviously, interest rates today are ridiculous. What do you think somebody would pay based off of a cap rate? Like, do you have any investors right now that are looking for these long-term investments?
Yeah, they're looking for 7 to 8 though.
Okay, an 8 cap, right? Let's be conservative and we'll say an 8% cap rate. So the building to somebody else at a 70, again, this is basically a true net after expenses and all reserves and everything, brings you to a value of 890. That means my pro forma value on this building will be just shy of 900 grand.
Right. I'm with you.
If I know that my intrinsic value in this building, highest case scenario, is 900 grand, I'm going to sell this building for 900 when I buy it, when I renovate, or somebody else buys it, renovate it, the profit's got to be all included. Well, then I probably can only pay a certain amount of money for this deal, right? I want to back out my numbers now. It's like, okay, well, back out your numbers real quick, man. It's like, based on this number, it's like, how much money do you want to make in profit? What would be comfortable for you?
100 grand minimum.
100 grand. Okay, great. So if we're going to sell it for 900 minus commission, okay, so times, let's say times 0.9, closing costs, commissions, everything. I want to be super conservative. Minus my $168,750 for my renovation costs. I'll take my closing costs, commissions, all the same thing you're going to do on a normal flip. I'm just backing it all out, right? So now it's like, I want to make $100,000 before I take out my 100 profit. I'm at 641 minus 100,000 in profit. Let's say to cushion myself, I say 500. Okay, great. I can pay 500 grand for this building. I would probably start at 350. Now, again, this is a building that's on the market. Try to say that I would buy this deal? Probably not, right? Probably like not. I wouldn't buy it at 685. I don't even know if I'd offer 500. I'd probably start at 350 like you, because I don't want to just, like I'm saying, worst case scenario, we want to make 100.
Worst case, right?
Exactly. So, okay, fine. We go in at 350 or 400, but I'm saying I'm basically going to go based on a price per, like intrinsically price per square foot where a property is selling. You need to know that. So you can go through CoStar and Reonomy and figure out on a price per square foot basis of what are they trading at. Okay, well, if everything's trading on a future value, right, of a future value here, $900, right? 900,000 divided by 6,250 is 144 a foot. That's my upside. Like that's when it's renovated and everything. If I know that market value is around 140, 145, 150 a foot, and I can sell it at that price easily, it's like if I know the market, I could easily sell it for 400 in a flip. I'll list it for 350 kind of thing. That's what I'm looking at for this. I want to, like, all day long, no question, I could sell it tomorrow. Listen, at 350, think about what you're paying a foot. 350,000 divided by 6,250, I'm paying 56 bucks a foot. I can't lose at $56. I'm playing that game on every size of deal. I intrinsically know where I need to be, how much it costs to get there, what's my risk tolerance to getting there. It's like, okay, based on that, my major upside of being here, I can only pay this. Does that make sense?
It does, man.